Hey everybody, Scott Sachs with the Synergy Group. Today is October 17th and we are bringing you the most updated RBI stats for the Washington, D.C. area. As always, we bring you Washington, D.C., Montgomery County, and Arlington, Virginia, so you have a sense of what's going on around the DMV. This month we're focusing on average sold price, days on market, active listings, and my favorite, sales price to original list price ratio as a percentage. We'll start over with average sales price. You can see that across all three jurisdictions, sales price is up year over year. Now keep in mind, this time last year, interest rates were over 8%. As you can see, as of today, this is real-time data that we're getting, you're at 4.089%. The spread on that is roughly 250 basis points. So the average 30-year mortgage right now, again, this fluctuates based off down payment, depending on whether it's a conforming or jumbo loan, but it's roughly 6.55%. So we're down almost 0.5. So in theory, prices should be up relative to the buying power that existed a year ago. But everything is hyper-local in our market, just like everyone else nationally. And the thing you gotta keep in mind is, the days on market, okay, so this is now, we're looking at trailing month to month and year over year. Washington, D.C., days on market up 15%, Montgomery County up 17.6%, Arlington down 4.17%. Now, these are incremental changes we're talking about. It's really important to understand that there are lies, damn lies, and there are statistics. And when you look at these numbers and see 15%, we're talking about, for Montgomery County, for example, the days on market, it went up 3 days. It went from 17 days to 20 days, which is a 17.6% increase in days on market, but it's nominal, right? So these ups and downs and these swings we're seeing, we're giving it the sample sizes in some cases, like Arlington County, because there's just not as much trading, can be exaggerated. So what's important with any of this is this gives you a snapshot of what's going on in the market and what you can expect, but it's really important to talk to your real estate professional because they can walk you through the nuances of market to market, what's going on based off asset class. Is it a condo? Is it a townhouse? Is it a single family home? All of those things are trading a little bit differently than others. So when you look at the active listings against days on market, it's no surprise that active listings are up 18.9% in DC, 32% in Montgomery County. Now this includes all asset classes, condos, townhouses, and single families. In Arlington, it's actually down 6.29% year over year. And so you can see the correlation here. As active listings go up, days on market is going up. And then what happens to the average sales price relative to these metrics is you'll start to see price softening. We are seeing price reductions in all jurisdictions. Part of that is depending on your price point. Part of that is depending on your asset class, right? When you look at the sales price to original list price, so this is before any reductions in price in order to get that property under contract, you can see we're still in a very healthy market. Washington, D.C., 98.8%. Montgomery County, 99.5%, and in Arlington, 98% of original list price, okay? So we're in a very insulated, healthy market relative to what I know is happening in other parts of the country. We are seeing inventory growing more exponentially than what we're seeing here. Again, we're talking about increases of 3 to maybe 7 days on market year over year, and active listings, we're talking about bumps, like take Arlington County, for example. The total amount of units sold is only 143 for the month. So relative to like Montgomery County, 682 units sold, you have to keep your sample size in mind when you look at numbers like this to know where the market is going and things like that. Now, the other question we're getting, being that we're here in the DC market, is how is the upcoming presidential election going to impact housing prices? Generally speaking, what you'll find over the last 20 election cycles is that there's really little to no change. And if anything, you actually see modest appreciation or growth in home values the year following a presidential election than you see anything else. And the only time I think there's an exception to that was one of Reagan's years and Obama because of the Great Recession that we experienced in 08 and 09. And what that points to is it becomes much less. And I can say anecdotally, being in the DMV market and having been an agent for 20 years and seen now, 5 presidential elections, is that there really is no change in market values, even on a hyper-local value. Capitol Hill, for example, where a lot of the administration and folks tend to live because it's close to federal buildings and everything else, you really don't see a price drop relative to any sort of election or administrative changeover or anything like that. Where you see value change is more macro. So what you have to do is you have to step back and go, okay, what are these candidates proposing? From a taxation perspective, are they encouraging home ownership incentives? And in this case, both candidates do have plans that they plan on rolling out to incentivize home ownership. Whether one is more effective than the other is not our job to speak to. But what I can say is that the election itself is really not going to dictate whether your home values go up or down. What you need to be looking at is more the macro environment of what's going on with, one, interest rates, which now we can say pretty safely that they're not going to go down as quickly as the Fed initially anticipated. They cut 50 basis points, and guess what? When they cut 50 basis points, the 10-year was at 3.65%. The 10-year has now gone up 50 basis points. The cost of borrowing, it went down to almost 5.25. I had a couple people lock on the day at the bottom where they got about 5.25 on a 30-year. Now it's back to 6.5%. Again, this is nationwide average. We've got very good lenders who can usually beat the national average, along with other contractors. One of the many great reasons why the Synergy Group is the Synergy Group. But I digress. So getting back to this, you've got to be cognizant of we're probably in a higher, longer scenario than we thought we were even 2 weeks ago, 30 days ago, because of some of the economic data coming out. That is what's driving home sales. That is what's driving home prices and affordability. There is still a nationwide affordability issue with people being able to afford the median home price value on what the median income is across the entire country. That's what these presidential candidates need to address and find solutions to. And my suggestion, reduce regulation. It is statistically shown as a developer and a investor myself that 36% of the cost of building now is tied up in regulation, whether that's permitting, zoning, delays in getting your building permits through permitting, the whole 9 yards. You need to reduce regulation so that builders can step in, you can get more new home starts, and you can create the affordable housing that's needed across the country to solve this affordability crisis. For more information, follow us at synergysoldit.com, and make sure you click the articles below because there's some helpful information there to help you navigate this process and understand our local market here in the DMV.